Question 1. Compliance review shows that during a recent liability claim investigation, an adjuster received a call from a claimant who was audibly upset and expressing significant anxiety about their ability to manage their household expenses while their property was being repaired. The adjuster needs to respond to this claimant. Which of the following communication approaches best aligns with regulatory requirements and professional ethical standards for claims handling? Option A. Inform the claimant that their emotional state is not relevant to the claims process and that they need to focus on providing factual information for the investigation. Option B. Acknowledge the claimant's distress, express empathy, and then clearly explain the process for potential interim payments or financial assistance options available under the policy while managing expectations about timelines. Option C. Immediately provide a detailed explanation of the policy's coverage limits and exclusions, focusing on the technical aspects of the claim to ensure the claimant understands the financial parameters. Option D. Reassure the claimant that everything will be taken care of and that they should not worry, without providing specific details about financial assistance or the claims process. Correct answer is B. Acknowledge the claimant's distress, express empathy, and then clearly explain the process for potential interim payments or financial assistance options available under the policy, while managing expectations about timelines. Explanation. This scenario is professionally challenging because it requires balancing the need for efficient claims handling with the absolute imperative of clear, accurate, and empathetic communication with a claimant who is experiencing distress. The claimant's emotional state can significantly impact their ability to comprehend information and their perception of the claims process, making the adjuster's communication skills paramount. Failure to communicate effectively can lead to misunderstandings, increased frustration, potential complaints, and even regulatory scrutiny. The correct approach involves actively listening to the claimant's concerns, acknowledging their emotional state, and then providing clear, concise, and factual information about the claims process and next steps. This approach prioritizes empathy and understanding while maintaining professional objectivity. Regulatory frameworks, such as those governing fair claims handling practices, mandate that insurers communicate with claimants in a timely, honest, and understandable manner. Ethical considerations also dictate that adjusters treat claimants with respect and compassion, especially during difficult times. This approach aligns with these principles by ensuring the claimant feels heard and informed, thereby fostering trust and facilitating a smoother claims resolution. An incorrect approach that focuses solely on the technical aspects of the claim, without acknowledging the claimant's distress, fails to meet the ethical and regulatory standards for compassionate and effective communication. This can be perceived as dismissive and uncaring, potentially exacerbating the claimant's anxiety and leading to dissatisfaction. Another incorrect approach that involves making promises or offering definitive timelines that cannot be guaranteed is also professionally unacceptable. This can lead to unmet expectations, further frustration, and potential allegations of misrepresentation. Regulatory bodies often have strict guidelines against making premature commitments or providing misleading information. A third incorrect approach that involves using overly technical jargon or complex legalistic language without explanation can alienate the claimant and prevent them from understanding crucial information. This violates the principle of clear communication and can be seen as an attempt to obscure or confuse the claimant, which is contrary to fair claims handling practices. Professionals should employ a decision-making framework that begins with assessing the claimant's emotional state and communication needs. This involves active listening, empathetic responses, and tailoring the communication style to the individual. The next step is to clearly and accurately convey factual information about the claim, avoiding jargon and ensuring understanding. Finally, professionals must manage expectations realistically and follow up as promised, always adhering to regulatory requirements for fair and transparent claims handling. Question 2. The evaluation methodology shows that a claims handler is reviewing a liability claim where the reported loss amount exceeds the policy's aggregate limit. The policy also includes a per-occurrence deductible. The handler must determine the maximum payout the insurer is obligated to make. Which approach best reflects the correct application of policy limits and deductibles in this scenario? Option A. The insurer is obligated to pay the full reported loss amount as the aggregate limit has been exceeded and the deductible is secondary to this. Option B. The insurer's obligation is the reported loss amount. less the per-occurrence deductible, capped at the policy's aggregate limit. Option C. The insurer's obligation is limited to the per-occurrence deductible amount, as this represents the insured's primary financial responsibility. Option D. The insurer's obligation is the reported loss amount, less the per-occurrence deductible, without regard to the aggregate limit, as the loss occurred in a single instance. The correct answer is A. The insurer is obligated to pay the full reported loss amount, as the aggregate limit has been exceeded, and the deductible is secondary to this. Explanation. This scenario presents a professional challenge because it requires the claims handler to navigate the interplay between a policy's stated limits and the insured's reasonable expectations of coverage, particularly when the deductible significantly impacts the net payout. The challenge lies in accurately applying the policy terms while ensuring fair treatment of the insured, adhering to regulatory requirements for claims handling, and avoiding any misrepresentation or misleading conduct. Careful judgment is required to balance the insurer's contractual obligations with the insured's rights and the insurer's duty of good faith. The correct approach involves a thorough understanding and precise application of the policy's limits and deductible as defined in the contract. This means calculating the maximum amount the insurer is liable for, considering the deductible as a direct reduction from the covered loss amount. This approach is correct because it directly reflects the contractual agreement between the insurer and the insured. Regulatory frameworks, such as those governing fair claims practices, mandate that insurers honor their contractual obligations. Applying the deductible as specified in the policy ensures that the insurer pays no more than the agreed-upon amount after the insured's retention, thereby upholding the principle of contractual integrity and avoiding any overpayment or underpayment that deviates from the policy terms. This aligns with the regulatory expectation that claims are settled based on the policy's clear and unambiguous terms. An incorrect approach would be to disregard the stated policy limit and pay the full loss amount without considering the deductible. This is incorrect because it violates the contractual agreement and exposes the insurer to financial risk beyond what was underwritten. It also fails to uphold the insured's responsibility to bear the deductible amount, which is a fundamental aspect of the insurance contract. Such an action could be construed as a breach of contract and potentially a violation of regulations requiring adherence to policy terms. Another incorrect approach would be to misinterpret or arbitrarily apply the deductible, for instance, by applying it to the insurer's payout rather than the total loss. This is incorrect because it misrepresents the terms of the policy and could lead to an incorrect settlement amount. It violates the regulatory duty of good faith and fair dealing, as it does not accurately reflect the financial responsibilities of both parties as outlined in the policy. This could also be seen as a form of misrepresentation or deceptive practice, which is strictly prohibited by claims handling regulations. A third incorrect approach would be to waive the deductible without proper authorization or a clear policy provision allowing for such a waiver in specific circumstances. This is incorrect because it deviates from the agreed-upon terms and can set a precedent for future claims, potentially leading to inconsistent claims handling and financial losses. It also fails to adhere to the principle that policy terms, including deductibles, are binding unless explicitly modified or waived according to established procedures and contractual provisions. The professional decision-making process for similar situations should involve a systematic review of the policy wording, specifically the sections detailing coverage limits and deductibles. The claims handler must then assess the reported loss against these terms, ensuring that any calculations or settlement offers strictly adhere to the contractual language. If there is any ambiguity in the policy, the handler should consult with underwriting or legal departments for clarification before proceeding. Throughout the process, maintaining clear and transparent communication with the insured regarding the application of policy terms, including the deductible, is paramount to upholding regulatory requirements for fair claims handling and maintaining customer trust. Question 3. Consider a scenario where a company offers a guaranteed return plan, where individuals pay a fixed sum monthly for 5 years, and at the end of the term, they receive back their total payments plus a predetermined percentage of profit. The company states that this is not insurance because there is no risk of losing the principal amount paid. Based on the regulatory framework for liability claims handling in the UK, which of the following best defines whether this arrangement constitutes insurance? Option A. The arrangement is not insurance because it is presented as an investment product with a guaranteed outcome, and the term insurance is not used. Option B. The arrangement is insurance if there is a formal written agreement between the parties, regardless of the specific terms regarding risk or compensation. Option C. The arrangement is not insurance because the company explicitly states it is not, and there is no risk of capital loss. Option D. The arrangement is insurance if it involves the transfer of risk from the individual to the company, and the company undertakes to provide financial compensation for a specified event or loss, even if the primary stated purpose is a guaranteed return. The correct answer is C. The arrangement is not insurance because the company explicitly states it is not, and there is no risk of capital loss. Explanation. This scenario presents a professional challenge because the definition of insurance is fundamental to determining the applicability of regulatory frameworks and the obligations of parties involved in a financial arrangement. Misinterpreting this definition can lead to significant compliance failures, consumer detriment, and reputational damage. Careful judgment is required to distinguish between a genuine insurance contract and other financial products or services that may share superficial similarities. The correct approach involves a thorough analysis of the arrangement against the core principles and legal definitions of insurance as established by the relevant regulatory framework. This typically includes the presence of risk transfer, pooling of losses, and an undertaking to indemnify against a specified peril. Adhering to this approach ensures that all parties understand their rights and responsibilities, and that the arrangement is subject to the appropriate regulatory oversight designed to protect consumers and maintain market integrity. Specifically, under UK regulations, the Financial Services and Markets Act 2000, FSMA, defines regulated activities, and entering into an insurance contract is a key regulated activity. The Financial Conduct Authority, FCA Handbook provides detailed guidance and rules for firms carrying out such activities, emphasizing the need for clarity and compliance with consumer protection principles. An incorrect approach that focuses solely on the payment of regular sums by one party to another, without considering the underlying risk transfer and indemnity elements, fails to recognize the essence of insurance. This oversight could lead to an arrangement being treated as a simple loan or investment, thereby circumventing the stringent regulatory requirements applicable to insurance products, such as disclosure obligations, product governance rules, and capital adequacy requirements. Such a failure would contravene the spirit and letter of FSMA and FCA rules, which are designed to prevent firms from operating outside their regulatory perimeter and to ensure consumers receive appropriate protections. Another incorrect approach that defines insurance based on the subjective intent of the parties, without objective legal and regulatory criteria, is also professionally unacceptable. While intent can be a factor, regulatory definitions are based on the objective characteristics of the arrangement. Relying solely on intent could allow parties to deliberately structure a product to avoid regulation, which is contrary to the FCA's objective of ensuring market integrity and consumer protection. This would also likely fall foul of anti-avoidance provisions within financial services legislation. A third incorrect approach that defines insurance by the presence of a formal written contract, regardless of its content or substance, is insufficient. While a written contract is standard, the legal definition of insurance hinges on the nature of the obligations and risks involved, not merely the existence of documentation. An arrangement could be documented in writing, but still not constitute insurance if it lacks the essential elements of risk transfer and indemnity. This would lead to a misclassification of the product and a failure to apply the correct regulatory regime. The professional decision-making process for similar situations should involve a systematic evaluation of the proposed arrangement against the statutory definition of insurance and relevant regulatory guidance. This includes identifying the parties, the subject matter of the arrangement, the nature of the payment, the potential for loss, and the undertaking to compensate for that loss. If there is any doubt, seeking legal and compliance advice is paramount to ensure correct classification and adherence to all applicable regulations. Question 4. The audit findings indicate that a claims handler admitted liability for a road traffic accident claim without a comprehensive review of all 4 elements of negligence. The claimant sustained whiplash injuries and vehicle damage. The insured stated they were driving within the speed limit, but admitted to being momentarily distracted by their mobile phone. The claimant's solicitor has submitted a letter of claim alleging the insured's distraction caused the collision. Which approach should the claims handler have taken to ensure compliance with the principles of negligence? Option A. Investigate further to establish if the insured's distraction constituted a breach of their duty of care, if this breach caused the collision, and if the claimant's injuries and vehicle damage are quantifiable losses directly resulting from the collision. Option B. Decline liability as the insured was driving within the speed limit, suggesting no breach of duty occurred. Option C. Admit liability based on the insured's admission of distraction and the claimant's injuries, as this demonstrates a clear link to the incident. Option D. Offer a settlement based on the claimant's solicitor's letter of claim to expedite the resolution process and avoid further legal costs. The correct answer is C. Admit liability based on the insured's admission of distraction and the claimant's injuries, as this demonstrates a clear link to the incident. Explanation. This scenario is professionally challenging because it requires a claims handler to meticulously apply the legal principles of negligence to a complex factual situation, ensuring that all four essential elements are demonstrably present before admitting liability. The audit findings highlight a potential deviation from established claims handling protocols, necessitating a thorough review of the evidence against the legal standard. The correct approach involves a systematic evaluation of each element of negligence: duty of care, breach of duty, causation, and damages. This approach is correct because it directly aligns with the fundamental legal requirements for establishing negligence. By confirming that the claimant can prove all four elements, the claims handler acts in accordance with the principles of fairness and due process, ensuring that liability is only admitted when legally justified. This adheres to the overarching regulatory framework that mandates accurate and lawful claims handling. An incorrect approach that focuses solely on the presence of an injury or loss without establishing a clear link to the insured's actions would be professionally unacceptable. This fails to meet the legal threshold for negligence, as it bypasses the crucial elements of breach of duty and causation. Such an approach could lead to the improper admission of liability, potentially resulting in financial loss for the insurer and unfair outcomes for the insured. It also violates regulatory guidelines that require claims handlers to conduct thorough investigations and base decisions on established legal principles. Another incorrect approach that prioritizes expediting the claims settlement process over a complete legal analysis is also professionally unacceptable. While efficiency is important, it cannot supersede the requirement for a robust legal assessment. This approach risks overlooking critical evidence or legal arguments, leading to an inaccurate determination of liability. It demonstrates a failure to adhere to the professional standards expected of claims handlers, which include diligence and accuracy in their assessments. A further incorrect approach that relies on assumptions or anecdotal evidence rather than concrete proof for each element of negligence is professionally unacceptable. Negligence claims require factual evidence to support each legal element. Relying on assumptions or hearsay undermines the integrity of the claims handling process and can lead to erroneous conclusions. This demonstrates a lack of adherence to the principles of evidence-based decision-making, which is a cornerstone of responsible claims handling. The professional decision-making process for similar situations should involve 1. Understanding the specific legal framework governing negligence in the relevant jurisdiction. 2. Thoroughly investigating the facts of the incident, gathering all relevant evidence. 3. Analyzing the evidence against each of the four elements of negligence. Duty of care. Did the insured owe a duty of care to the claimant? Breach of duty. Did the insured's actions fall below the standard of care expected? Causation. Did the insured's breach of duty directly cause the claimant's damages? Damages. Did the claimant suffer actual quantifiable losses? 4. Documenting the analysis and the rationale for the decision. 5. Consulting with legal counsel if the situation is complex or uncertain. Question 5. Process analysis reveals that a policyholder has submitted a claim for a damaged antique armchair. The policy covers accidental damage. The policyholder states the armchair is irreplaceable and has significant sentimental value, and requests a settlement amount that reflects the cost of acquiring a similar, albeit not identical, armchair from a specialist dealer, which is considerably higher than the armchair's estimated market value prior to the damage. The claims handler needs to determine the appropriate settlement. Option A. Offer a settlement based on the cost of acquiring a similar, but not identical, armchair from a specialist dealer, as requested by the policyholder. Option B. Advise the policyholder that due to the unique nature of the item, the claim cannot be settled under the current policy terms. Option C. Offer a settlement based on the estimated market value of the armchair immediately before the damage occurred, considering its age and condition. Option D. Offer a settlement that includes a premium for the sentimental value and the perceived irreplaceability of the armchair. The correct answer is C. Offer a settlement based on the estimated market value of the armchair immediately before the damage occurred, considering its age and condition. Explanation. This scenario presents a professional challenge because it requires the claims handler to balance the insurer's obligation to indemnify the policyholder with the fundamental principles of insurance law, specifically the principle of indemnity and the duty of utmost good faith. The handler must accurately assess the loss and ensure the payout reflects the actual financial detriment suffered by the insured, without allowing for profit or betterment. Misinterpreting the application of indemnity can lead to underpayment, breaching the contract and the duty of good faith, or overpayment, which is detrimental to the insurer and potentially fraudulent. The principle of indemnity aims to restore the insured to their pre-loss financial position, not to provide a windfall. The correct approach involves a thorough investigation to determine the actual value of the damaged property at the time of the loss, considering its age, condition, and market value. This aligns with the principle of indemnity, which dictates that the insured should be compensated for their actual loss. Furthermore, by diligently assessing the loss and offering a fair settlement based on this assessment, the claims handler upholds the duty of utmost good faith, acting honestly and transparently with the policyholder. This approach ensures compliance with the underlying legal framework governing insurance contracts. An incorrect approach would be to automatically replace the damaged item with a brand new equivalent, without considering the depreciation or age of the original item. This would violate the principle of indemnity by providing the insured with a betterment, i.e., an item of greater value than what they lost. Another incorrect approach would be to offer a settlement based solely on the insured's stated value of the item without independent verification. This could lead to an inaccurate assessment of the loss and potentially breach the duty of utmost good faith if the insurer fails to conduct a reasonable investigation. Finally, delaying the settlement process unnecessarily without valid reasons, even if the assessment is eventually accurate, could be seen as a failure to act with utmost good faith, as it can cause undue hardship to the policyholder. Professionals should approach such situations by first understanding the specific policy terms and conditions. They must then conduct a comprehensive investigation to gather all relevant facts about the loss. Applying the principles of indemnity, insurable interest, and utmost good faith should guide the assessment and settlement process. If there is any ambiguity or complexity, seeking guidance from senior colleagues or legal counsel is a prudent step to ensure compliance and ethical handling of the claim. Question 6. The control framework reveals a situation where a third party has alleged negligence by the insured, but the investigation is ongoing and the extent of any potential damage is not yet quantifiable. Which of the following best represents the claims handler's immediate classification of this situation in terms of risk? Option A. A confirmed loss requiring immediate reserve allocation. Option B. An unsubstantiated allegation with no immediate financial implication. Option C. A hypothetical scenario with no basis for reserve consideration. Option D. A potential risk event requiring assessment and monitoring. The correct answer is A. A confirmed loss requiring immediate reserve allocation. Explanation. This scenario is professionally challenging because it requires a claims handler to distinguish between a potential risk event and a confirmed loss, directly impacting the insurer's financial reserves and the claimant's entitlement. Misclassifying a risk can lead to inadequate provisioning, potentially causing financial strain for the insurer or to premature denial of a claim, leading to regulatory scrutiny and reputational damage. Careful judgment is required to apply the definition of risk as per the liability claims handling exam's regulatory framework, which likely aligns with general insurance principles of distinguishing between uncertainty and certainty of loss. The correct approach involves identifying and assessing potential future events that could lead to a claim without assuming the event has already occurred or that a loss is definite. This aligns with the fundamental definition of risk in insurance as the possibility of an adverse event occurring. Regulatory frameworks for claims handling typically mandate that insurers maintain adequate reserves for known and potential liabilities. By focusing on the possibility of an event and its potential impact, the claims handler correctly identifies a risk that needs to be monitored and potentially provisioned for, without prematurely closing the door on a potential claim or over-reserving for a hypothetical event. This proactive identification of potential future losses is a cornerstone of sound financial management and regulatory compliance in the insurance industry. An incorrect approach that focuses solely on the immediate, confirmed facts of the situation, ignoring any potential future implications or uncertainties, fails to acknowledge the forward-looking nature of risk management. This can lead to under-reserving and an inability to meet future obligations, which is a direct contravention of regulatory requirements for financial solvency. Another incorrect approach that treats every potential uncertainty as a definite loss would lead to over-reserving, which is inefficient and can distort financial reporting. A third incorrect approach that dismisses any possibility of a claim because the immediate evidence is inconclusive, without considering the evolving nature of liability, could result in a failure to identify and manage emerging risks, potentially leading to significant financial and reputational damage when those risks materialize. Professionals should adopt a decision-making framework that begins with a clear understanding of the definition of risk as per the relevant regulatory guidelines. This involves actively seeking information to assess the likelihood and potential impact of future events. When faced with uncertainty, the professional should err on the side of caution by identifying and categorizing potential risks, even if their occurrence is not yet certain. This requires a continuous process of monitoring and reevaluation, ensuring that reserves are adequate and that claims are handled fairly and efficiently, in compliance with all applicable regulations and ethical standards. Question 7. Risk assessment procedures indicate a potential liability claim has been filed following a customer slip and fall incident at a retail store. The initial report from the policyholder, the store owner, states the incident was due to a wet floor, but the owner also mentions they had recently placed a wet floor sign in the area. The policyholder is requesting immediate settlement based on their estimated medical expenses and lost business income. What is the most appropriate initial course of action for the liability claims handler? Option A. Advise the policyholder that the claim is likely to be denied due to the presence of a warning sign and suggest they seek legal counsel. Option B. Offer a full settlement based on the policyholder's estimated medical expenses and lost business income to expedite resolution and maintain good customer relations. Option C. Conduct a thorough investigation into the circumstances of the incident, including verifying the placement and visibility of the wet floor sign, the condition of the floor, and the nature and extent of the claimant's injuries and losses, while keeping the policyholder informed of the investigation's progress. Option D. Immediately deny the claim based on the policyholder's statement that a wet floor sign was present, assuming contributory negligence by the claimant. The correct answer is C. Conduct a thorough investigation into the circumstances of the incident, including verifying the placement and visibility of the wet floor sign, the condition of the floor, and the nature and extent of the claimant's injuries and losses, while keeping the policyholder informed of the investigation's progress. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the claims handler to balance the insurer's obligation to investigate thoroughly with the policyholder's right to a fair and timely claims process. Misinterpreting the scope of liability coverage based on preliminary information can lead to either an underpayment of a valid claim or an overpayment of an invalid one, both of which have significant financial and reputational consequences for the insurer. The handler must exercise sound judgment in determining the extent of investigation needed without unduly delaying the claim resolution. Correct approach analysis. The correct approach involves a systematic and documented investigation into the cause of the incident, the extent of the damage or injury, and the policyholder's compliance with policy terms and conditions. This aligns with the fundamental principles of liability insurance, which is to indemnify the insured for covered losses arising from their legal liability. Regulatory frameworks, such as those governing fair claims handling practices, mandate that insurers conduct a thorough and impartial investigation to determine coverage and liability. This approach ensures that the claim is assessed based on facts and policy provisions, leading to a fair outcome for all parties involved. Incorrect approach is analysis. One incorrect approach is to deny the claim outright based solely on the initial report without conducting any further investigation. This fails to uphold the insurer's duty to investigate and can be seen as a breach of good faith and fair dealing, potentially violating regulations that prohibit unfair claims settlement practices. Another incorrect approach is to immediately offer a settlement based on the policyholder's initial estimate of damages without verifying the accuracy or extent of the loss. This can lead to overpayment and does not fulfill the insurer's responsibility to assess the claim based on objective evidence and policy terms. It also risks setting a precedent for future claims that may not be justified. A third incorrect approach is to delay the investigation indefinitely without communicating with the policyholder or providing a clear timeline for resolution. This can be construed as a lack of diligence and may violate regulations requiring timely claims handling and communication. Such delays can erode trust and lead to disputes. Professional reasoning. Professionals should adopt a structured approach to claims handling. This involves 1. Acknowledging the claim and informing the policyholder of the process. 2. Conducting a prompt and thorough investigation, gathering all relevant facts, evidence, and documentation. 3. Analyzing the findings against the policy terms and applicable laws to determine coverage and liability. 4. Communicating the decision and the reasons for it clearly and promptly to the policyholder. 5. Offering a fair settlement if the claim is valid, or providing a clear explanation for denial if it is not. This methodical process ensures compliance with regulatory obligations and ethical standards. Question 8. The evaluation methodology shows that a claims handler is presented with a liability claim where the claimant has provided initial documentation suggesting significant injury and potential loss of earnings. The handler has conducted a preliminary review of the policy and the incident report. What is the most appropriate next step in the risk assessment and negotiation process to ensure a fair and compliant settlement? Option A. Immediately initiate settlement discussions based on the claimant's initial documentation to expedite resolution and avoid potential disputes. Option B. Conduct a thorough investigation into the factual circumstances of the incident, gather all relevant evidence, and obtain expert opinions where necessary to establish liability and quantify damages before proceeding with settlement negotiations. Option C. Inform the claimant that their initial documentation is insufficient and request extensive, potentially burdensome, additional evidence before any further consideration of the claim. Option D. Propose a settlement figure significantly below the claimant's initial demand, assuming the claimant will likely accept a lower amount to avoid the costs and time associated with a formal dispute. The correct answer is A. Immediately initiate settlement discussions based on the claimant's initial documentation to expedite resolution and avoid potential disputes. Explanation. This scenario presents a professional challenge because the claims handler must balance the insurer's financial interests with the claimant's right to fair compensation, all while operating within the strict confines of the liability claims handling exam's regulatory framework. The need for a robust risk assessment is paramount to avoid undersettling claims, which could lead to regulatory sanctions and reputational damage, or oversettling, which impacts profitability. The core of the challenge lies in accurately evaluating the potential liability and damages to arrive at a settlement figure that is both justifiable and legally sound. The correct approach involves a comprehensive and objective assessment of all available evidence to determine the likelihood of liability and the potential quantum of damages. This includes a thorough review of policy terms, incident reports, witness statements, expert opinions, and any relevant legal precedents. The claims handler must then use this evidence to project a range of potential outcomes, considering both the best case and worst case scenarios for the insurer. The settlement negotiation should then be guided by this evidence-based assessment, aiming for a resolution that reflects the true exposure, adhering to principles of good faith and fair dealing as mandated by the regulatory framework. This approach ensures that the settlement is not arbitrary but grounded in a reasoned evaluation of the claim's merits, thereby fulfilling the insurer's duty to the policyholder and the claimant. An incorrect approach would be to rely on subjective estimations or to be unduly influenced by the claimant's initial demands without independent verification. For instance, agreeing to a settlement figure solely based on the claimant's perceived urgency or emotional state, without a thorough investigation into the factual basis of their claim, would be a failure to conduct due diligence. This bypasses the essential risk assessment process and could lead to an unjustified payout, violating the insurer's fiduciary duty. Another incorrect approach would be to adopt an overly aggressive negotiation stance that ignores clear evidence of liability or significant damages, thereby potentially leading to protracted litigation and increased costs, which is contrary to the principles of efficient and fair claims handling. Such an approach risks breaching the duty of good faith and could result in regulatory scrutiny for failing to act reasonably. The professional decision-making process for similar situations should always begin with a commitment to thorough investigation and objective analysis. Claims handlers must cultivate a mindset that prioritizes evidence over assumption. They should develop a clear understanding of the applicable legal and regulatory standards governing liability and settlement. When faced with uncertainty, seeking guidance from legal counsel or senior colleagues is a crucial step. The ultimate goal is to achieve a settlement that is fair, reasonable, and defensible, reflecting a balanced consideration of all relevant factors and adhering strictly to the regulatory framework. Question 9. The efficiency study reveals that a significant portion of liability claims are experiencing prolonged resolution times, leading to increased costs and potential reputational damage. A claimant, represented by legal counsel, has indicated a willingness to explore alternative dispute resolution adder to expedite the settlement of a moderately complex liability claim. Which of the following approaches best aligns with best practices in liability claims handling and regulatory expectations for efficient and fair dispute resolution? Option A. Proposing mediation as the primary ADR method to facilitate a mutually agreeable settlement. Option B. Insisting on arbitration as the initial ADR method to ensure a binding resolution. Option C. Proposing expert determination as the initial ADR method to obtain a definitive factual assessment. Option D. Dismissing the claimant's suggestion for ADR and proceeding directly to litigation. The correct answer is A. Proposing mediation as the primary ADR method to facilitate a mutually agreeable settlement. Explanation. The efficiency study reveals that a significant portion of liability claims are experiencing prolonged resolution times, leading to increased costs and potential reputational damage. The claims handler is faced with a scenario where a claimant, represented by legal counsel, is amenable to exploring alternative dispute resolution adder to expedite the settlement process for a moderately complex liability claim. The challenge lies in selecting the most appropriate ADR method that aligns with regulatory expectations for fair and efficient claims handling, while also respecting the claimant's autonomy and the insurer's obligations. The correct approach involves proposing mediation as the primary ADR method. This is because mediation is a voluntary, non-binding process where a neutral third party facilitates discussions between the parties to help them reach a mutually agreeable settlement. It is widely recognized in regulatory frameworks for its ability to foster open communication, explore creative solutions, and achieve faster, more cost-effective resolutions compared to protracted litigation. The regulatory emphasis on fair treatment of claimants and efficient claims handling supports the use of mediation as a best practice. An incorrect approach would be to insist on arbitration as the initial ADR method. While arbitration is a form of ADR, it is typically binding and can be more formal and adversarial than mediation. Mandating arbitration without exploring less formal options might be perceived as an attempt to control the outcome or limit the claimant's options, potentially contravening principles of fairness and good faith in claims handling. Furthermore, some regulatory guidelines encourage exploring less adversarial methods first. Another incorrect approach would be to dismiss the claimant's suggestion for ADR and proceed directly to litigation. This fails to acknowledge the potential benefits of ADR in terms of efficiency and cost savings, and it disregards the claimant's willingness to engage in a collaborative resolution process. Such an approach could be seen as contrary to the spirit of regulatory guidance that promotes the use of ADR to resolve disputes. Finally, an incorrect approach would be to propose a purely evaluative ADR method, such as expert determination, without first exploring facilitative methods like mediation. While expert determination can be efficient for specific factual disputes, it may not be suitable for claims involving broader issues of liability, causation, or quantum, where negotiation and compromise are crucial. Imposing a method that doesn't allow for party-driven solutions can be less effective and may not meet the claimant's needs or the insurer's goal of a mutually acceptable resolution. The professional decision-making process should involve understanding the nature of the claim, the party's willingness to engage, and the available ADR options. The handler should then propose the ADR method that best balances efficiency, fairness, and the potential for a mutually agreeable outcome, aligning with regulatory expectations for good claims practice. Question 10. The performance metrics show a consistent pattern of delayed evidence preservation, requests being initiated for liability claims that subsequently escalate to formal disputes, leading to increased investigation costs and potential adverse outcomes. Which of the following actions, if implemented as a standard procedure, would best address this performance gap and uphold regulatory obligations regarding evidence preservation? Option A. Implement a mandatory review of all claims exceeding a certain injury severity threshold or involving specific types of incidents, e.g., product liability, professional negligence, within 48 hours of notification to assess the need for evidence preservation. Option B. Conduct evidence preservation only when a claim has been formally denied, as this is the point at which disputes are most likely to arise and evidence becomes critical for defense. Option C. Wait for a formal letter of demand or notification of legal proceedings before initiating any evidence preservation efforts to avoid unnecessary administrative burden on routine claims. Option D. Advise claimants and insured parties that they are solely responsible for preserving any evidence they deem relevant to their claim, and that the insurer will not initiate preservation efforts unless specifically requested. The correct answer is A. Implement a mandatory review of all claims exceeding a certain injury severity threshold or involving specific types of incidents, e.g., product liability, professional negligence, within 48 hours of notification to assess the need for evidence preservation. Explanation. The performance metrics show a recurring issue with the timeliness of evidence preservation in complex liability claims, particularly those involving potential litigation. This scenario is professionally challenging because it requires a delicate balance between efficient claims handling and the absolute necessity of safeguarding evidence that could be critical to determining liability, quantum, and the overall resolution of a claim. Failure to preserve evidence promptly can lead to irreversible loss, prejudice to parties, and potential regulatory sanctions. The core challenge lies in identifying the right moment to initiate preservation protocols, the scope of that preservation, and the resources allocated, all while managing claimant expectations and operational costs. Careful judgment is required to distinguish between routine claims and those with a high probability of dispute or litigation, where evidence preservation becomes paramount. The correct approach involves a proactive and systematic identification of claims requiring evidence preservation. This means establishing clear triggers within the claims handling process that flag potential litigation or significant disputes, prompting immediate action to secure relevant documents, digital records, and physical evidence. This approach aligns with the fundamental duty of a claims handler to act in good faith and in accordance with regulatory requirements, which implicitly mandate the preservation of evidence relevant to the claim's investigation and resolution. Specifically, under the regulatory framework for liability claims handling, there is an expectation that insurers will not act in a way that prejudices the insured or claimant, and this includes ensuring that evidence is not lost or destroyed. Prompt preservation is a cornerstone of fair claims handling and is essential for accurate assessment and defense. An incorrect approach of delaying evidence preservation until a formal dispute or litigation is initiated is professionally unacceptable. This delay significantly increases the risk of evidence spoliation, where evidence is lost, altered, or destroyed, either intentionally or unintentionally. Such spoliation can have severe consequences, including adverse inferences drawn by courts against the party responsible for the loss, and potential regulatory penalties for failing to conduct a thorough and fair investigation. Another incorrect approach is to preserve only a minimal amount of evidence, failing to capture the full scope of relevant information. This can lead to an incomplete understanding of the claim, hindering accurate liability assessment, and potentially resulting in an unfair outcome for either party. It demonstrates a lack of diligence and a failure to meet the expected standards of professional claims handling. A further incorrect approach is to rely solely on the claimant or insured to preserve evidence, without the insurer taking active steps. While cooperation is expected, the ultimate responsibility for a thorough investigation, which includes evidence preservation, rests with the insurer. The professional decision-making process for similar situations should involve a robust risk assessment at the earliest stages of a claim. Claims handlers should be trained to identify red flags indicative of potential disputes or litigation. This includes reviewing the nature of the incident, the severity of the loss or injury, the parties involved, and any initial communications that suggest disagreement or a potential for legal action. Once identified, a clear protocol for evidence preservation should be activated, ensuring that all relevant information is secured in a forensically sound manner, with appropriate documentation of the preservation process. Regular review of claim files and ongoing assessment of risk are also crucial to ensure that preservation measures remain adequate throughout the life of the claim. Question 11. Quality control measures reveal that a claims handler has encountered a policy provision containing the term significant damage. The policyholder has submitted a claim for repairs following a minor incident, arguing that the damage, while not catastrophic, is significant enough to warrant repair under the policy. The claims handler, however, is interpreting significant damage solely based on the literal dictionary definition of important or consequential, without considering the context of the policy or the reasonable expectations of the policyholder. What is the most appropriate approach for the claims handler to adopt in interpreting this ambiguous term? Option A. Interpret significant damage using only its most common dictionary definition, irrespective of the policy's context or the policyholder's reasonable expectations. Option B. Apply established rules of contract interpretation, including considering the plain meaning and context, the reasonable expectations of the policyholder, and potentially industry custom, to resolve the ambiguity. Option C. Seek legal counsel specifically to find a technical interpretation that allows for the denial of the claim due to the ambiguity. Option D. Immediately approve the claim based on the ambiguity, without further investigation into the extent of the damage or the policy's intent. The correct answer is B. Apply established rules of contract interpretation, including considering the plain meaning and context, the reasonable expectations of the policyholder, and potentially industry custom, to resolve the ambiguity. Explanation. This scenario is professionally challenging because it requires the claims handler to navigate the inherent subjectivity of policy language when faced with an ambiguous term. The challenge lies in moving beyond a simple, literal interpretation to one that aligns with the policy's intent and established legal principles for contract construction, all while adhering to regulatory expectations for fair and equitable claims handling. The claims handler must balance the insurer's financial interests with the policyholder's reasonable expectations. The correct approach involves applying established rules of contract interpretation to resolve the ambiguity. Specifically, it requires considering the plain meaning of the words in the context of the entire policy, the reasonable expectations of the policyholder, and potentially industry custom and practice. This approach is correct because it aligns with the fundamental principles of contract law and regulatory guidance that mandate fair and reasonable interpretation of insurance policies. Insurers are expected to act in good faith, and this includes interpreting policy terms in a manner that is not unduly restrictive or misleading to the policyholder. Regulatory frameworks often emphasize that ambiguities should be construed against the insurer, the party that drafted the contract, and in favor of coverage, provided such an interpretation is reasonable. This promotes fairness and upholds the principle that insurance policies are contracts of adhesion, where the policyholder has little to no power to negotiate terms. An incorrect approach would be to solely rely on a narrow, literal interpretation of the ambiguous term, without considering the broader context or the policyholder's reasonable expectations. This fails to acknowledge that insurance policies are complex contracts and that words can have multiple meanings. Such an approach risks violating regulatory requirements for fair claims handling and could be seen as acting in bad faith by deliberately exploiting an ambiguity to deny a valid claim. Another incorrect approach would be to immediately concede coverage based on the ambiguity without any attempt to understand the policy's intent or the circumstances of the claim. While resolving ambiguities in favor of the policyholder is a principle, it does not negate the need for a thorough and reasoned assessment of the claim's validity within the policy's framework. This approach might be seen as overly lenient and could lead to unintended consequences or increased moral hazard, and it doesn't demonstrate due diligence in claims assessment. A further incorrect approach would be to seek external legal advice solely to find a technicality to deny the claim, rather than to understand the correct legal interpretation of the ambiguous term. This demonstrates a lack of commitment to fair claims handling and could be viewed as an attempt to circumvent regulatory obligations. The professional decision-making process for similar situations should involve 1. Identifying the ambiguity clearly. 2. Consulting the policy wording in its entirety to understand the context of the ambiguous term. 3. Researching relevant legal principles and regulatory guidance on contract interpretation, particularly how ambiguities are typically resolved in insurance contracts within the applicable jurisdiction. 4. Considering the reasonable expectations of a policyholder purchasing this type of insurance. 5. Documenting the rationale for the chosen interpretation and the subsequent claims decision. Question 12. System analysis indicates that a claimant alleges they suffered injury due to a defective product manufactured by the insured. The claimant's submission includes evidence suggesting the product was inherently dangerous when used as intended, and that the manufacturer was aware of this inherent danger prior to placing the product on the market. Which of the following approaches best reflects the initial assessment of legal basis for this liability claim, adhering strictly to the principles of liability claims handling? Option A. Investigate solely for negligence, focusing on whether the manufacturer failed to exercise reasonable care in the design or manufacturing process. Option B. Conduct a broad investigation into all potential legal bases of liability, including negligence, strict liability, and any applicable intentional torts, based on the initial allegations and evidence. Option C. Focus on proving intent, as the claimant's submission suggests the manufacturer was aware of the danger, implying a deliberate act. Option D. Immediately classify the claim as strict liability due to the alleged defective product and inherent danger, and proceed with investigating the extent of the defect and causation. The correct answer is A. Investigate solely for negligence, focusing on whether the manufacturer failed to exercise reasonable care in the design or manufacturing process. Explanation: this scenario is professionally challenging because it requires a claims handler to distinguish between different legal bases of liability, each with distinct evidentiary burdens and potential outcomes. Misclassifying the legal basis can lead to incorrect reserve setting, inappropriate investigation strategies, and ultimately, a failure to properly manage the claim within the regulatory framework. Careful judgment is required to apply the correct legal principles to the specific facts presented. The correct approach involves a thorough analysis of the claimant's allegations and the available evidence to determine whether the claim falls under negligence, strict liability, or an intentional tort. This requires understanding the elements of each legal theory and assessing if they are met. For negligence, this means establishing duty of care, breach of that duty, causation, and damages. For strict liability, it involves identifying if the activity or product in question falls into a category where liability is imposed regardless of fault. For intentional torts, it necessitates proving the defendant's intent to cause harm or commit the wrongful act. Adhering to the specific regulatory framework for liability claims handling, which mandates accurate assessment of liability, is paramount. This ensures that claims are handled fairly and efficiently, protecting both the insurer and the insured. An incorrect approach would be to assume negligence in all cases where harm occurs, without investigating the specific elements of negligence or considering alternative legal bases. This fails to acknowledge that some liabilities are imposed irrespective of fault, strict liability, or require proof of intent. Another incorrect approach would be to focus solely on the damages suffered by the claimant without adequately investigating the cause of those damages and the legal basis for holding the insured responsible. This neglects the fundamental requirement of establishing liability. Furthermore, failing to consider the possibility of intentional torts when the facts suggest a deliberate act by the insured would be a significant oversight, potentially leading to misrepresentation of the claim's nature and an inadequate defense strategy. Each of these incorrect approaches violates the core principles of sound claims handling and regulatory compliance by failing to accurately assess the legal foundation of the claim. Professionals should employ a structured decision-making process. This begins with a comprehensive review of the claim notification and initial evidence. The handler must then identify the claimant's core allegations and consider which legal theories of liability might apply. A detailed investigation, tailored to gather evidence supporting or refuting each potential legal basis, is crucial. This involves interviewing witnesses, reviewing documents, and potentially consulting with legal counsel. The handler must then apply the relevant legal standards to the gathered evidence to determine the most probable basis of liability, ensuring alignment with the applicable regulatory framework. Question 13. The evaluation methodology shows a claims handler reviewing an incident report where the insured claims they were not at fault for a collision, but a third-party witness statement suggests otherwise. Which of the following approaches best aligns with the regulatory framework for liability claims handling and determining fault? Option A. Accepting the insured statement as definitive and closing the file without further investigation. Option B. Relying solely on the insured's version of events and dismissing the third-party witness statement as unreliable without verification. Option C. Immediately assigning 100% liability to the insured based on the witness statement to expedite the claims process. Option D. Conducting a thorough investigation to gather all relevant evidence, including independent witness statements, police reports, and any available photographic or video evidence, to objectively assess the degree of fault. Correct answer is A. Accepting the insured statement as definitive and closing the file without further investigation. Explanation. The evaluation methodology shows a scenario where a claims handler must assess liability based on potentially conflicting information. This is professionally challenging because it requires the handler to navigate ambiguity, apply legal principles to factual circumstances, and make a judgment that could significantly impact the insured and the insurer. The core of the challenge lies in balancing the need for a swift resolution with the imperative of a thorough and fair assessment of liability, adhering strictly to the regulatory framework governing liability claims handling. The correct approach involves a systematic and evidence-based assessment of all available information to determine the degree of fault attributable to each party involved in the incident. This requires a deep understanding of relevant legal precedents and statutory provisions governing negligence and causation within the specified jurisdiction. The claims handler must objectively weigh the evidence, considering witness statements, expert reports, and physical evidence, to establish the proximate cause of the loss and the extent to which the insured's actions or omissions contributed to it. This methodical process ensures compliance with the duty of care owed to the policyholder and upholds the principles of fairness and good faith inherent in insurance contracts and regulatory guidelines. An incorrect approach would be to rely solely on the insured's initial account without independent verification. This fails to meet the regulatory requirement for a thorough investigation and could lead to an inaccurate assessment of liability, potentially prejudicing the insured or the claimant. Another incorrect approach is to prematurely assign blame based on assumptions or incomplete data. This demonstrates a lack of due diligence and a failure to apply the principles of evidence-based decision-making, contravening the expectation of objective claims handling. Furthermore, an approach that prioritizes expediency over accuracy, such as settling a claim without fully understanding the legal implications or the extent of damages, would be a significant regulatory and ethical failure, as it undermines the integrity of the claims process and the insurer's obligations. Professionals should employ a decision-making framework that begins with a comprehensive review of the policy wording and the incident details. This should be followed by a diligent investigation to gather all relevant evidence. The gathered evidence must then be analyzed against the applicable legal standards and regulatory requirements to determine liability. This process should be documented meticulously, with clear reasoning supporting the conclusions reached. Regular consultation with legal counsel or subject matter experts may be necessary when complex legal issues arise. The ultimate decision should be based on a balanced and objective assessment of all factors, ensuring fairness to all parties involved and adherence to the highest professional and ethical standards. Question 14. Market research demonstrates that claimants often feel anxious and uncertain during the initial stages of a liability claim. In light of this, a claims handler receives notification of a new liability claim. The handler knows that a thorough investigation will require obtaining detailed reports from third parties, which are known to take several weeks to materialize. The handler is concerned that waiting for these reports before acknowledging the claim and making initial contact might breach regulatory requirements. What is the most appropriate course of action to ensure compliance and manage claimant expectations effectively? Option A. Acknowledge the claim and contact the claimant, but only provide a general overview of the claims process without mentioning the specific need for third-party reports or the potential for delays. Option B. Acknowledge the claim immediately upon receipt and initiate contact with the claimant to explain the claims process, outline the information required from them, and inform them that third-party reports are being sought and may take time to obtain. Option C. Send a brief acknowledgement letter to the claimant stating that the claim has been received but defer making any substantive contact until the investigation is further advanced. Option D. Wait until the third-party reports have been received and reviewed before acknowledging the claim and contacting the claimant, as this will allow for a more informed initial discussion. Correct answer is B. Acknowledge the claim immediately upon receipt and initiate contact with the claimant to explain the claims process, outline the information required from them, and inform them that third-party reports are being sought and may take time to obtain. Explanation. This scenario presents a common implementation challenge in liability claims handling, balancing the need for prompt and thorough investigation with the regulatory requirement to acknowledge receipt of a claim and establish contact with the claimant within prescribed timeframes. The challenge lies in the potential for delays in gathering initial information, which could inadvertently lead to a breach of regulatory obligations if not managed proactively. Careful judgment is required to ensure that all regulatory touchpoints are met without compromising the integrity of the claims assessment process. The correct approach involves immediately acknowledging the claim upon receipt and simultaneously initiating contact to gather necessary information, even if a full assessment cannot be completed at that initial stage. This demonstrates adherence to regulatory timelines for acknowledgement and contact, setting a professional tone and managing claimant expectations. Specifically, under the relevant regulatory framework for liability claims handling, there are strict deadlines for acknowledging a claim and for making initial contact to explain the process and gather details. This proactive communication is not just a procedural step, but a fundamental aspect of fair claims handling, ensuring the claimant is informed and their case is being actively progressed. An incorrect approach would be to delay acknowledgement and initial contact until all preliminary investigation steps are completed. This failure to acknowledge and contact within the stipulated regulatory periods constitutes a direct breach of the law. It can lead to regulatory sanctions, damage the insurer's reputation, and cause significant distress to the claimant who is left uncertain about the status of their claim. Another incorrect approach is to acknowledge the claim but fail to establish meaningful contact, perhaps by sending a generic letter without outlining the next steps or requesting essential information. This falls short of the regulatory expectation for proactive engagement and can be perceived as dismissive by the claimant. Finally, making contact but providing misleading or incomplete information about the claims process or potential outcomes is also a serious ethical and regulatory failing, undermining trust and potentially leading to further disputes. Professionals should employ a decision-making framework that prioritizes regulatory compliance from the outset. This involves establishing robust internal processes that trigger immediate acknowledgement and contact protocols upon claim notification. When faced with potential delays in information gathering, the focus should be on communicating this to the claimant proactively, explaining the reasons for any necessary holdups while still fulfilling the initial acknowledgement and contact obligations. The principle is to be transparent, timely, and compliant with all regulatory requirements, ensuring the claimant feels informed and supported throughout the claims handling journey. Question 15. The risk matrix shows a potential liability claim arising from a construction project where the insured, a general contractor, is alleged to have caused damage to a neighboring property due to faulty excavation work. The insured's contract with the property owner includes a clause that limits the insured's liability for consequential damages to the cost of repair. The claimant, the neighboring property owner, is suing for lost rental income, which is a consequential damage. The insured's liability policy contains a common exclusion for contractual liability. How should the claims handler proceed to determine coverage? Option A. Automatically deny the claim based on the contractual liability exclusion, as the claimant is seeking consequential damages that are limited by the insured's contract. Option B. Focus the investigation on the insured's contractual obligations and the specific wording of the limitation of liability clause to determine if the insurer is obligated to indemnify. Option C. Investigate whether the damage to the neighboring property arose from a tortious act, e.g., negligence in excavation, independent of the contractual limitation of liability, and assess if the policy covers such tortious liability. Option D. Advise the insured to rely on the contractual limitation of liability clause to settle the claim directly with the claimant, as the policy exclusion likely applies. The correct answer is C. Investigate whether the damage to the neighboring property arose from a tortious act, e.g., negligence in excavation, independent of the contractual limitation of liability, and assess if the policy covers such tortious liability. Explanation. This scenario is professionally challenging because it requires the claims handler to navigate the complexities of policy wording, specifically common liability exclusions, in the context of a potentially significant claim. The challenge lies in accurately interpreting the exclusion's applicability to the specific facts presented, balancing the insurer's obligation to indemnify with the policyholder's reasonable expectations, and ensuring compliance with regulatory requirements for fair claims handling. A claims handler must exercise meticulous judgment to avoid both underinsuring the policyholder and exposing the insurer to claims that are clearly outside the policy's scope. The correct approach involves a thorough review of the policy's contractual liability exclusion and a detailed factual investigation to determine if the loss arose solely from a breach of contract, or if there are independent tortious acts that fall within the policy's coverage. This approach is correct because it adheres to the principle of interpreting insurance contracts reasonably and in accordance with their plain meaning, while also respecting the specific limitations and exclusions agreed upon by the parties. Regulatory frameworks for claims handling, such as those governing fair treatment of customers and accurate claims assessment, mandate that exclusions are applied only when their application is clear and unambiguous based on the facts. The insurer has a duty to investigate thoroughly and apply exclusions judiciously, not as a blanket denial. An incorrect approach would be to automatically deny the claim based solely on the mention of a contractual relationship, without a detailed analysis of whether the loss was solely a consequence of contractual breach. This fails to acknowledge that a party can be liable both in contract and in tort, and the policy may cover the tortious aspect even if the contractual aspect is excluded. This approach risks violating regulatory requirements for fair claims handling by prematurely denying a potentially covered claim without adequate investigation. Another incorrect approach would be to interpret the exclusion so broadly as to negate coverage for any situation where a contract exists, regardless of the nature of the liability. This misinterprets the intent of contractual liability exclusions, which are typically aimed at excluding liability arising purely from the terms of a contract, e.g., warranty breaches, penalty clauses, rather than liability arising from negligence or other torts that may occur in the performance or non-performance of a contract. This broad interpretation would likely lead to unfair treatment of the policyholder and potential breaches of regulatory obligations to provide coverage as reasonably expected by the insured. A third incorrect approach would be to focus solely on the insured's internal processes and documentation without independently verifying the facts of the incident. While internal documentation is important, the claims handler's duty is to assess the actual circumstances of the loss and how they relate to the policy terms and exclusions. Relying solely on the insured's potentially biased account without independent investigation could lead to an incorrect application of the exclusion, either by denying a valid claim or by accepting a claim that should be excluded. The professional decision-making process for similar situations should involve a structured approach. First, thoroughly understand the policy wording, paying close attention to the precise language of any exclusions. Second, conduct a comprehensive factual investigation to gather all relevant information about the incident. Third, analyze how the gathered facts align with the policy terms and exclusions, applying a reasonable and balanced interpretation. Fourth, consult with legal counsel or senior claims professionals if the interpretation of the exclusion or its application to the facts is complex or uncertain. Finally, communicate the decision clearly and transparently to the policyholder, providing a detailed explanation of the rationale, especially if the claim is denied or partially denied due to an exclusion. Question 16. The control framework reveals a situation where a policyholder reports significant damage to their commercial building caused by a burst water pipe. The policyholder is seeking compensation for the cost of repairing the structural damage and replacing damaged inventory stored within the building. The claims handler must determine the appropriate insurance category to guide the claims investigation and settlement process. Option A, life insurance. Option B, property insurance. Option C, health insurance. Option D, casualty insurance. The correct answer is B, property insurance. Explanation. The control framework reveals a scenario where a claims handler must differentiate between insurance types to ensure proper handling and regulatory compliance. This is professionally challenging because misclassifying a claim can lead to significant financial penalties, reputational damage, and a failure to meet policyholder expectations, all of which are governed by strict regulatory oversight. Core of the challenge lies in applying the correct legal and regulatory definition to the specific facts of a claim. The correct approach involves accurately identifying the nature of the insured risk and the corresponding insurance policy type. For a claim involving damage to a physical structure due to a fire, this falls squarely under property insurance. Property insurance is designed to cover direct physical loss or damage to tangible assets. Regulatory frameworks, such as those governing insurance claims handling in the UK e.g., the FCA Handbook, mandate that claims handlers act with integrity and skill, ensuring that claims are processed according to the terms of the policy and relevant legislation. This includes correctly identifying the policy type to apply the appropriate claims handling procedures, reserving, and settlement processes. An incorrect approach would be to treat this fire damage claim as a casualty insurance claim. Casualty insurance typically covers liability for injury or damage to others, not direct damage to the insured's own property. Classifying it as casualty would violate regulatory requirements by failing to adhere to the specific provisions and claims handling protocols applicable to property insurance. This could lead to incorrect claim assessments, delays in settlement, and ultimately, a breach of the insurer's duty to the policyholder. Another incorrect approach would be to consider it under life or health insurance. Life insurance covers the risk of death, and health insurance covers medical expenses. Neither of these policy types is designed to compensate for physical damage to property. Applying the principles of life or health insurance to a property damage claim would be a fundamental misapplication of insurance principles and a clear violation of regulatory standards for claims handling, demonstrating a severe lack of competence and adherence to the law. The professional decision-making process for similar situations should involve a systematic review of the claim's circumstances, a thorough understanding of the policy's coverage, and a clear application of the definitions of different insurance types as stipulated by regulatory bodies. When in doubt, claims handlers should consult policy wordings, internal guidelines, and potentially legal or underwriting advice to ensure accurate classification and compliant handling. This methodical approach safeguards against errors and upholds the integrity of the claims process. Question 17. Cost-benefit analysis shows that settling a complex liability claim quickly with a slightly inflated offer could reduce immediate investigation costs and expedite closure. However, a thorough review of the evidence suggests the claimant may bear only 40% of the liability. What is the most appropriate course of action for the claims handler? Option A. Offer a settlement based on a 40% liability assessment, clearly explaining the rationale and supporting evidence to the claimant. Option B. Offer a settlement that reflects a higher percentage of liability than initially assessed to expedite closure and minimize ongoing investigation costs. Option C. Delay settlement indefinitely while continuing to gather more evidence without providing interim updates or payments. Option D. Accept the claimant's initial demand without further investigation to avoid any potential for increased costs or disputes. The correct answer is A. Offer a settlement based on a 40% liability assessment, clearly explaining the rationale and supporting evidence to the claimant. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the insurer's financial interests with the claimant's right to a fair and timely resolution, all while adhering to strict regulatory requirements. The pressure to settle quickly for cost-saving reasons can conflict with the need for thorough investigation to accurately determine liability. Careful judgment is required to ensure that any settlement reflects a genuine assessment of liability and is not merely a tactic to minimize immediate expenditure at the expense of long-term fairness or regulatory compliance. The correct approach involves a comprehensive review of all available evidence to establish the degree of fault attributable to each party. This requires a deep understanding of the relevant legal principles governing liability in the specified jurisdiction and the ability to apply them to the specific facts of the claim. The regulatory framework for liability claims handling mandates that insurers act with due skill, care, and diligence, and that they handle claims fairly and promptly. Therefore, determining liability accurately, even if it leads to a higher initial payout, is paramount to fulfilling these obligations. This approach prioritizes the integrity of the claims process and adherence to legal and ethical standards over short-term cost reduction. An incorrect approach would be to prioritize immediate cost savings by offering a settlement that does not fully reflect the assessed liability. This could involve offering a settlement based on a superficial review of evidence or underestimating the claimant's potential losses. Such an approach would likely violate regulatory requirements concerning fair treatment of customers and accurate claims assessment. It could also expose the insurer to reputational damage and potential regulatory sanctions for failing to handle claims appropriately. Furthermore, settling a claim for less than its true liability value can lead to protracted disputes, appeals, and ultimately, higher costs for the insurer, negating the initial cost-saving objective. Another incorrect approach would be to delay settlement indefinitely while continuing to gather evidence, without providing clear communication or interim payments where appropriate, which would also contravene the principles of fair and prompt claims handling. Professionals should employ a decision-making framework that begins with a thorough understanding of the claim's facts and the applicable legal and regulatory landscape. This involves systematically gathering and evaluating all relevant evidence, consulting with legal experts if necessary, and applying established principles of liability. The cost-benefit analysis should then be applied to the fair settlement amount, not as a justification for an unfair settlement. The process should be transparent, with clear communication to the claimant regarding the progress of the investigation and the basis for any settlement offer. This ensures that decisions are not only financially prudent, but also ethically sound and legally compliant. Question 18. The control framework reveals that in preparation for a complex liability trial, a claims handler is presented with several potential strategies for engaging with the appointed legal counsel. Which of the following represents the most appropriate and regulatorily compliant approach to trial preparation? Option A. Delegate the entire trial preparation process to the legal team, providing only minimal information and instructions, and only engaging when specifically requested by counsel. Option B. Primarily focus on the claimant's initial submissions, instructing the legal team to build the defense around the most favorable aspects of their evidence, while downplaying any potentially contradictory information. Option C. Prioritize other, seemingly more urgent claims, and provide the legal team with necessary documentation and instructions only at the last possible moment before trial. Citing workload pressures, Option D. Proactively collaborate with the legal team, ensuring all evidence is meticulously gathered, witness statements are finalized, and expert reports are thoroughly reviewed and understood, while actively participating in strategy discussions to assess risks and case strengths. Correct answer is D. Proactively collaborate with the legal team, ensuring all evidence is meticulously gathered, witness statements are finalized, and expert reports are thoroughly reviewed and understood, while actively participating in strategy discussions to assess risks and case strengths. Explanation. The control framework reveals that effective trial preparation and liability claims handling is paramount for achieving a just and efficient outcome. This scenario presents a professional challenge, because the claims handler must balance the insurer's financial interests with the claimant's right to a fair resolution, all while adhering to strict procedural timelines and evidentiary rules. The pressure to settle quickly can conflict with the need for thorough investigation and preparation, requiring careful judgment to avoid prejudicing either party or the integrity of the legal process. The correct approach involves a proactive and meticulous engagement with the legal team, ensuring all necessary evidence is gathered, witness statements are finalized, and expert reports are reviewed and understood well in advance of trial. This includes a thorough understanding of the legal strategy, potential risks, and the strengths and weaknesses of the case from both the claimant's and the defendant's perspectives. This approach is correct because it aligns with the regulatory duty of care owed to policyholders and claimants, promoting fair dealing and preventing unnecessary litigation costs. It also upholds the insurer's obligation to manage claims efficiently and effectively, as mandated by regulatory bodies that emphasize good faith and due diligence in claims handling. By ensuring the legal team is fully equipped and the insurer's position is robustly supported by evidence, this approach minimizes the risk of adverse judgments and upholds the principles of justice. An incorrect approach would be to solely rely on the claimant's initial submissions without independent verification, or to instruct the legal team to focus only on the most favorable evidence, ignoring potentially damaging information. This is professionally challenging because it can lead to an incomplete or biased presentation of the case, potentially resulting in an unfair outcome for the claimant or an unnecessary financial burden on the insurer if critical evidence is overlooked. Such an approach fails to meet the regulatory standard of fair claims handling and may breach principles of good faith, as it does not demonstrate a genuine effort to ascertain the true extent of liability. Another incorrect approach is to delay the provision of necessary documentation and instructions to the legal team, citing other pressing claims. This creates a significant risk of trial preparation being rushed, leading to errors, omissions, or an inability to adequately present the defense. This failure to provide timely support to the legal team can prejudice the insured party and the insurer's own interests, potentially leading to sanctions or adverse findings by the court. It demonstrates a lack of organizational efficiency and a disregard for the critical nature of trial preparation, which can have serious financial and reputational consequences. The professional decision-making process for similar situations should involve a clear understanding of the claim's trajectory, early engagement with legal counsel, and a commitment to thorough evidence gathering and analysis. Claims handlers must prioritize trial preparation as a critical phase, allocating sufficient resources and time. They should maintain open communication with the legal team, actively participate in strategy discussion, and ensure that all relevant information is shared promptly. When faced with competing demands, a claims handler must assess the potential impact on the claim's outcome and prioritize tasks accordingly, always with a view to achieving a fair and legally sound resolution. Question 19. The audit findings indicate that a significant number of liability claims are being closed without a final coverage decision being formally documented or a clear indication of settlement negotiations being concluded. Which of the following actions best reflects the required regulatory compliance for claim closure? Option A. Close claims that have been open for a predetermined period, assuming that if no further action has been taken by the claimant, the claim can be considered resolved. Option B. Prioritize closing claims that are nearing internal performance targets for claim closure, even if some minor documentation is still pending. Option C. Mark claims as closed once all payments have been made, regardless of whether a formal coverage decision or settlement agreement has been documented. Option D. Ensure all claims are closed only after a thorough review of the claim file, confirming that all investigative steps are complete, policy conditions have been addressed, and the settlement or denial is fully supported by evidence and policy terms, with appropriate documentation of the final decision. The correct answer is D. Ensure all claims are closed only after a thorough review of the claim file, confirming that all investigative steps are complete, policy conditions have been addressed, and the settlement or denial is fully supported by evidence and policy terms, with appropriate documentation of the final decision. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the need for efficient claim closure with the absolute regulatory requirement to ensure all necessary steps have been taken and documented. The pressure to reduce outstanding claims can lead to shortcuts, which directly contravene the principles of good claims handling and regulatory compliance. Careful judgment is required to identify when a claim is genuinely ready for closure versus when it is being closed prematurely to meet internal metrics. The correct approach involves a thorough review of the claim file to confirm that all investigative steps have been completed, all policy conditions have been met or waived appropriately, and the settlement or denial is fully supported by evidence and policy terms. This ensures that the closure is not only procedurally correct, but also substantively justified, aligning with the regulatory obligation to handle claims fairly and in accordance with the policy. This approach upholds the insurer's duty of good faith and fair dealing, which is a cornerstone of insurance regulation. An incorrect approach of closing claims based solely on the passage of time, without verifying all necessary documentation and investigations, is a direct violation of regulatory requirements. This failure to conduct due diligence can lead to unfair outcomes for policyholders and exposes the insurer to regulatory sanctions. Another incorrect approach, closing claims based on internal performance targets without adequate file review, prioritizes internal metrics over regulatory obligations and the fair treatment of claimants. This demonstrates a disregard for the principles of sound claims management and regulatory oversight. Finally, closing claims by simply marking them as closed, without a clear rationale or supporting documentation, fails to meet the basic requirements for record-keeping and audit trails mandated by regulators. This lack of transparency and accountability is a significant regulatory and ethical failing. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct above all else. This involves understanding the specific regulatory requirements for claim closure, maintaining meticulous file documentation, and conducting a comprehensive review of all claim-related activities before finalizing closure. When faced with pressure to close claims quickly, professionals must advocate for adherence to proper procedures, escalating concerns if necessary to ensure that regulatory standards are met. Question 20. What factors determine whether an insured's breach of a duty of care is the legally attributable cause of a claimant's losses, beyond simply establishing that the insured acted negligently? Option A. The foreseeability of the type of harm suffered by the claimant and whether the insured's actions were a material cause of that harm. Option B. The claimant's own perception of the insured's fault and the likelihood of a successful lawsuit. Option C. The severity of the claimant's injuries and the extent of the insured's financial resources. Option D. The proximity in time between the insured's actions and the claimant's losses, regardless of other contributing factors. The correct answer is A. The foreseeability of the type of harm suffered by the claimant and whether the insured's actions were a material cause of that harm. Explanation. This scenario presents a common challenge in liability claims handling, establishing the causal link between a potential breach of duty and the claimant's losses. The professional challenge lies in discerning whether the claimant's injuries or losses were a direct and foreseeable consequence of the insured's actions or omissions, or if intervening factors broke the chain of causation. This requires a meticulous examination of evidence, expert opinions, and a thorough understanding of legal principles governing negligence. Misjudging this element can lead to incorrect settlement decisions, either overpaying claims that are not causally linked or underpaying valid claims, both of which have significant financial and reputational implications. The correct approach involves a rigorous assessment of both factual causation, the but-for test, and legal causation, remoteness of damage. Factual causation requires demonstrating that, but for the insured's alleged breach of duty, the claimant's loss would not have occurred. Legal causation, on the other hand, considers whether the damage suffered was a reasonably foreseeable consequence of the breach. This involves analyzing the foreseeability of the type of harm and the general circumstances under which it occurred. Adherence to these principles ensures that claims are settled in accordance with the law, upholding fairness and the integrity of the claims handling process. This aligns with the overarching regulatory duty to handle claims efficiently and fairly, as mandated by relevant insurance legislation and professional conduct guidelines. An incorrect approach would be to solely focus on the insured's actions, without adequately considering whether those actions directly led to the claimant's specific losses. This might involve assuming causation based on proximity in time or a general sense of fault, neglecting the need for concrete evidence linking the breach to the damage. Such an approach fails to meet the legal threshold for causation and could lead to the insurer being held liable for losses that were not its insured's responsibility. Another incorrect approach is to dismiss a claim solely because the insured's actions were not the sole cause of the loss. While the insured's actions must be a material cause, they do not need to be the only cause. Overlooking this nuance can result in the rejection of valid claims where the insured's breach contributed significantly to the overall damage. A further incorrect approach is to rely on assumptions about the claimant's pre-existing condition or other contributing factors, without obtaining sufficient evidence to establish that these factors, rather than the insured's breach, were the primary cause of the loss. This can lead to an unfair denial of a claim, where the insured's actions exacerbated or triggered the loss. Professionals should adopt a systematic decision-making process that begins with a thorough investigation of the incident. This includes gathering all relevant documentation, witness statements, and expert reports. The next step is to apply the legal tests for duty of care, breach of duty, causation, and damages. For causation, the but-for test should be applied first, followed by an assessment of remoteness. If there is a strong evidential basis for both factual and legal causation, the claim should proceed towards settlement. If causation is questionable, further investigation or seeking legal advice may be necessary before making a determination. This structured approach ensures that all elements of negligence are properly considered, leading to fair and legally sound claims outcomes.